Good evening, ladies and gentlemen. We'd like to welcome you to our weekly Investor Forum series. We'll be jumping right into the company profile before we formally introduce our guest for this evening, Senator Don Webby, CD, Group CEO of GraceKennedy Group. We encourage our viewers to post their questions on social media and remember to tag us with the hashtag MIL Investor Forum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel. We'll also be featuring a segment on foreign exchange, so be sure to stick around until the end of the program. GraceKennedy and Company Limited was founded on February 14, 1922 in Jamaica by Dr. John J. Grace and Mr. Fred William Kennedy. GraceKennedy Limited is now one of the Caribbean's largest conglomerates that operates in Jamaica, the Caribbean region, Central America, North America, US and Canada, and the UK with over 20 subsidiary companies. The company operates in the financial services and food services industries with principal activities in food trading, banking and investments, insurance, and money services. GraceKennedy Foods is the Caribbean's leading distributor of food and non-food consumer products. In 2020, the GraceKennedy Group increased its stake in the general insurance company, Key Insurance Company Limited, by 15% to a total of 80%, with an aim to restructure and recapitalize the company. GK established two new business units, digital transformation and mergers and acquisitions. The M&A unit will focus on local and international acquisition targets that will foster inorganic growth. A subsidiary of GK won the Governor General's Award for the Exporter of the Year, as well as the Prime Minister's Award for the top large exporter in manufacturing. I take this moment to remind you all that if you're seeking to expand your investment portfolio or embark on your first investment journey, Mayberry Investments Limited can guide you in achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Our social media handles should pop up somewhere on the screen. Now let's introduce our very special guest for this evening. Senator Don Webby, CD, has served Jamaica well over the years through his varying roles in both the private and public sectors. On July 1st, 2011, Senator Webby was appointed Group Chief Executive Officer of GraceKennedy Limited, having served in various roles after joining the company in 1995. He led the group's local and international expansion with a focus on banking, investment, and insurance services. He has directed the listing of the company in Trinidad and Tobago, Barbados, and the Eastern Caribbean Securities Exchange, sited in St. Kitts. Under his leadership, GraceKennedy acquired 100% ownership of First Global Bank Limited, now a wholly owned subsidiary of the company. Following his service in the Senate from 2007 to 2009, he was in March 2016 appointed as an independent senator. In September 2020, he was reappointed to the Senate, allowing him to continue his service to Jamaica and his contribution to nation building. He is a past vice president of the PSOJ and is the current chairman of JAMPRO. Senator Webby serves on several boards, is an avid sports fan, and was instrumental in GK's sponsorship of the schoolboy cricket in Jamaica and the ISSA GraceKennedy Boys and Girls Championship. On October 16, 2017, he received the Order of Distinction in the Commander class for his sterling contribution to both the public and private sectors. He is currently New Zealand's honorary consul to Jamaica. Today, Senator Webby will be giving us an investor update on GraceKennedy Group. Welcome, Senator Webby, for joining us.
Thank you very much, Dan. Thank you very much, and welcome to all your guests. Let me first of all congratulate you, Dan, and Chris and Gary on the Mayberry Investment Forum. I think this is where all CEOs want to be, to give an update on their respective companies. Congrats, it's a great product. And when I was invited by Gary, I jumped at the opportunity to share GraceKennedy's performance and speak a little bit about our strategy going forward. Let me say to your guests and your listeners that and I was thinking about it earlier, I normally start most of my presentations for the last year speaking about COVID-19. And I decided for this presentation, I'm going to change that a bit and think about the future more, because this too shall pass. But having said that, I'll say this, that we must, as a country, remain consistent in our approach to fighting this pandemic, as we have a responsibility to our loved ones, our communities, our businesses, and our country. Thank God today I saw in the media that the first batch of vaccines were administered. And I really believe that if we are going to return to normal economic activities as best as possible, we need to ensure that we have a vaccination program with at least 60 to 70% of our population being vaccinated, certainly by the end of the year. So that is my my little position on COVID-19. I don't know, it's top of the mind of everybody. So I have a few slides to share, Dan. So I'll start.
Absolutely.
I want to start off by sharing with you and your guests and the listeners our vision of GraceKennedy to be a global consumer group, delivering long-term consumer and shareholders value through brand building and innovative solutions in food and financial services provided by highly skilled and motivated people. And let me say, highly skilled and motivated people is probably the most important line in that vision statement. And that vision statement was created in July 2011 when I became the group CEO. Having created that vision, ladies and gentlemen, we created what we call 4 strategic drivers, because you can have a vision, but you must have a strategy to support that vision. And we have created that strategy with what we call strategic drivers: sustainable growth and innovation, consumer centricity, internal processes and efficiency, and a performance-driven culture. Flowing up from those strategic drivers, we want to define ourselves as a global consumer group and unlock shareholders' value with an improved ROE. I think the financial performance of the GraceKennedy Group for 2020 is really based on the team, the board, the management team, the frontline workers in a time of a pandemic, really executing well on our strategic drivers. So the question is, what is a global consumer group? You know, I've been asked that question many times. We, as I said, what gets measured gets done. So we have defined a global consumer group in terms of GraceKennedy as a company that has 60% of our revenue earned outside of Jamaica. You would see there the latest, based on our audit account, is 46.6%. So we have some work to do in terms of reaching that 60%. And 50% of our profits to be derived outside of Jamaica. We're currently at 45%. And third, we want to leverage our relationships with multinationals and form partnerships to enhance our offerings. So you would recognize, and that was really built around the foundation of Western Union, where we represent Western Union in 12 countries, and we are by far the largest money services remittance company in this hemisphere. P&G, that was an acquisition, Consumer Brands Limited, and it's doing fantastic in Jamaica. And our recent partnership is with Nestle, where we're actually distributing some products for them through World Brands. And also we're doing some manufacturing for them through dairy industries. So what gets measured gets done. So this is what we are looking at in terms of driving the future of GraceKennedy. So the question is, how are we doing? How are we doing? So if you look on the pie chart there, you would see that 53.4% of our revenue is generated outside of, in Jamaica, sorry, and compared to 55.7%. Look at where we saw the largest growth for 2020, North America, where 27.3% of our revenue is now generated in North America, United States, and Canada. So we have seen a significant growth in the USA market. And Caribbean represents 6.8%, and UK and Europe 12.5%. So if we were to fast forward, colleagues, to 2025, we're saying that at 53.4% should be 40%. And let me make it very clear that we're not saying that we're not going to be growing in Jamaica, but we believe the potential to grow outside of Jamaica at a faster rate is much more probable based on our strategy that we have in place. In terms of profits, 55% is generated inside Jamaica for 2020 based on our audited accounts, and outside of Jamaica, 45%. You would see that we are absolutely moving in the right direction. So if you look at outside of Jamaica for 2019, we were at 39%, and now we're at 45%. And I'll expand on that in my presentation, later in the presentation. 2020, in terms of financial performance, colleagues, has been a phenomenal year for the GraceKennedy Group. Our revenues are up 12%, or 12.3 billion Jamaican dollars. So you would say our total revenues for 2020 was 115.4 billion. I'm going to show you in the next slide the segment of where the growth is coming from. But we are extremely pleased in terms of the revenue growth for the group. So here is it by segment. By far, you'd see that the food division continues to be the main contributor of that 115 billion with 90.8 billion, followed by our money services business, insurance, and of course, banking and investment. I guess the key takeaway, colleagues, from this slide is that all our business segments in the GraceKennedy Group showed increases in revenue. Money services up 13.3%, insurance 23.1%, banking and investment 2.5%, and food trading 11.5%. Let me say, as it relates to revenue, our US business performed exceptionally well. And in fact, the Grace brand is growing at over 20% in the US market. One of the things, you know, when we say that when there's a crisis, there's an opportunity, what we did in the US market, we formed a strategic alliance with Instacart, which is one of the largest logistics company in terms of grocers and retailers in the USA market. And I'm happy to share with the audience this evening that our revenue through Instacart is up 500%. And the growth for that continues into 2021. Our growth in terms of the chains, the Walmart, the Publix, the ShopRite, is also increasing in more than double digits. Our patties in the US market has grown 115% year over year. And I remind you that we made a significant investment in the patty manufacturer in Florida. In terms of insurance, growing by 23.1%, Dan, you did mention it in your opening. Our insurance division is doing very well, and Key Insurance, our latest acquisition, is outperforming our expectations, and that has contributed to the increase in insurance revenue. Money services, there's a great story here, colleagues. Again, when there's a crisis, there's an opportunity. So when the pandemic started in March, our remittance flows, we were down 34%. And we huddled as a management team, and we said to ourselves, a simple question: who in New York, which is our largest market, 60% of remittances come from the New York market, the tri-state area, who in New York will go to a Western Union location with a lockdown in the dead of winter? And we decided that we're going to refocus our energies, our investment, our marketing investment, and our technology investment in terms of digital remittances. I'm happy to say that our remittances over the digital platform for 2020 increased by 400%, and our overall remittances are significantly up. So we're moving from a 34% down to a figure of 30% up for 2020, primarily because of our digital registration, or digital remittances. Here's another story. You have to go into a location previously to register so you can send from bank to bank or from your computer to a bank. We created a software where you can actually stay at home, create a digital registration, upload it, so you can send remittances now without moving from your desk or your dining table at home to your loved ones in Jamaica, bank to bank. I'm very excited about that product. Profit before tax, the revenue translated to profit before tax. This is historical for the GraceKennedy Group. Our revenues are up 58.5% or $3.6 billion. It's a remarkable performance and we're all pleased. And I want to use this opportunity to really recognize my team, the GraceKennedy team, on this remarkable performance. Again, our USA business in terms of profitability and our UK business performed exceptionally well. And in fact, I'll share with you that all our overseas food companies showed significant increases in profit year over year, along with our domestic food business, who also performed well. Our remittance business, money services, also performed better than ever, and we expect that to continue into 2021. So the headlines, 58.5% increase in profit before tax, 3.6 billion, a total of $9.7 billion. Here's a breakdown by segment. Money services, up 27.8%, insurance 21.1%, banking and investment, you see that's a negative there, and food trading up 96.3%. Again, that is because of the excellent performance in all our markets in our food trading business. Let me say for banking and investment, because of the pandemic, and my colleagues in the financial services industry would understand, we had to be very, very prudent in terms of our loan provisioning, and our GK Capital, we hold an equity portfolio, and the equity market went down by approximately 20% or so. And that is the primary reason why you're seeing a negative there. But the operating profits of both our bank and GK Capital did well. Here's our stock price, and your chairman, Mr. Berry, when we first presented our, I think, as early as the first quarter call, and said, "Don, you broke the code." And I said, "Chris, I'll break the code when I see the market recognizing the true value of the GraceKennedy stock." So let me share with you in a different way this slide here. So on December 31st, our stock was trading at 62.68, and today it traded at 89.98. Put it another way, if you invested in GraceKennedy on the last day of 2020, your investment would be worth 43.5% more now. And the market, if you look at the overall market, is basically flat. So I'm really heartened that the market is seeing the true value of the GraceKennedy stock. And we expect that our performance going forward will continue to be a healthy performance, and hopefully the market will recognize the value of the GraceKennedy stock, or continue to recognize the value of the GraceKennedy stock. But we are very pleased that the market has recognized our good performance. So the question is sustainability of the great performance. My mind from last year was in 2021. How am I going to ensure, and how are my team, how are we going to ensure that the 2020 performance continues in the future? That is the question. I want to make a point that the 2020 performance is not a one-year performance. This has been work that we have been doing in terms of our strategic drivers for a few years. And we have executed on those drivers, and that's why you're seeing a good performance for 2020. So what are we going to be doing to ensure? I have formed a special unit, digital transformation unit, and I got a presentation by the head of that unit, Stephen Whittingham, yesterday. And the digital factory is almost up. and running. We engaged McKinsey, one of the leading consultants in this area. And I expect us to be rolling out 2 new digital products within the next nine weeks. And then you're going to be seeing more products being rolled out over the next 18 months or so. One of the beautiful things is that we already have some products and that we can try and cross-sell. So for example, First Global Bank, we have Global Access Plus. Is a fantastic online banking platform, which we want to leverage as we transform the financial services as a focus, and by extension, our food division digitally. In fact, Hilo, our supermarket chain, we are in the final stages, and we will be testing shortly, of setting up an online system, an e-commerce site. And I'm hoping to press the button before our AGM in May, where Hilo would have a fully automated online platform that you can stay at home, order your groceries online, and get it delivered. Operational efficiency is extremely important. You recall that in 2018, we did a restructuring or reorganizing exercise advised by London Consulting Group. We removed $6 million US of costs from the business. As I said to my team, that was not a project, it must be a process. At the business unit levels, we must always be stress testing of how, as a company, at all levels, department, subsidiary, group office, of how can we become more efficient. Margin management in the food business is extremely important. One thing that I'll say, Dan and Chris and Gary, there's some headwinds coming in terms of margin management for the food business, but I think we're on top of it. You know, that freight rates from Southeast Asia, and I think I heard my colleague CEO, Richard Paddoe, mentioned it. I think in the Mayberry forum, has gone up by 3 or 4 times. You know, so what you used to pay $3,000 for, you know, paying something like 10, 12,000, and that's something that we have to manage. But we anticipated that from last year, and we have been managing our inventory on a forward-looking basis. So we expect to come through that headwind quite well. But it's something that, as a country, we have to bear in mind that food inflation could be a big factor. But I take this opportunity to remind you that GraceKennedy in Jamaica, we have 5 factories. And in fact, the factories did very well. We're probably running 24/7 for most of our factories last year because of the increased demand, not only locally, but overseas. Investing in manufacturing, I just mentioned that, optimization and modernization. Over the last 4 or 5 years, we have invested $12 million US in manufacturing, and I'm sure you'd have read somewhere that we are merging our manufacturing plant of Nalpro and canning. That is going to result in significant savings and more efficiency, and in fact, more innovation in terms of how can we produce new products in this merged factory. Invest in our brands, that is so important. So I shared the story with Gary and Dan earlier. So in the US, when people were hunkering down because of the pandemic and some amount of panic came in, we actually did the opposite. We said that we are going to be investing even heavier in our marketing program for our Grace brand. And I am happy to say that we actually were on primetime TV, ABC and NBC, and that has resulted in tremendous brand recognition. And in fact, when you get the calls from our brothers and sisters in the diaspora, in the USA market, they speak about it with a lot of pride. That, listen, boy, I was watching the news and I see that the Grace brand is on the TV. Dana feels so good about it. And I think that has made us the brand equity in the US market and the UK and Canada much stronger. And I think that will enable us to have the sustainability of growth in those markets. Compliance and risk management. Everybody knows you can't be in financial services, especially remittances, without a strong and robust risk management program. We're investing about 4% of our revenue from remittances back into compliance. That's a similar benchmark with Western Union. And we have really strengthened our compliance team. As I said to my AGM, our shareholders last year, colleagues, compliance is going to be a competitive advantage for the GraceKennedy Group. And when you see what has happened this year in terms of our performance in our remittance business, compliance is a competitive advantage for the GraceKennedy Group of companies. And we have really adopted a zero tolerance as it relates to compliance. Working capital, Mr. Peart knows the saying. He's a graduate of the GraceKennedy University. Cash is king, especially when you have a pandemic and there's a lot of uncertainty. You have to ensure that you have a strong balance sheet with cash, with liquidity. So we are managing it very, very carefully. And in fact, I meet every Monday morning with the senior leadership of the GraceKennedy Group. And on that agenda is working capital management and foreign exchange market. And let me tell you, that's a very detailed discussion to every subsidiary have to report in of what is happening to their cash and what is the impact on the FX market on their respective businesses. Grow market share, well, we have built the brand equity, or we are continuing to build the brand equity, especially in the overseas markets. And I believe that is going to result in increased market share in all the markets that we operate in. And most of all, colleagues, if you ask me why GraceKennedy has been very successful, it's what I refer to as a performance-driven culture. What gets measured gets done. And if you're going to have a very successful business anywhere in the world, the most important thing is to attract, retain, and develop talent at all levels, not only the senior levels, at all levels. And this was one of the best news I got in January. In fact, I remember the day, January 3rd, 2021. So every year at GraceKennedy, we do what we call an employee engagement survey. All employees in the GraceKennedy Group everywhere in the world. So last year, we decided that we wanted to benchmark, or the year before, 2019, we wanted to benchmark it against international companies. And that engagement showed that it was 65% is best practice. If you are 65%, you're doing good. We came out at 66%. So I said, okay, that is okay. I want to do better than good. This year, colleagues, despite the pandemic and despite the uncertainty, our employee engagement survey came out at 71%, the highest in the GraceKennedy Group's history. And I made a comment to my team and I sent them a personal letter, right? There's a strong correlation between profitability and employee engagement. If there's one thing you remember in my presentation this afternoon, I'm asking you to remember that. There's a strong correlation between profitability and employee engagement. We're also very active, as we always have been, in our corporate social responsibility commitments. As you probably would have read, we have given 10 million of tablets to the basic schools and to universities. We've also set up a food bank at the University of West Indies and UTech. And we're doing a number of initiatives in terms of our corporate social responsibility and on the environment. The one that have challenged my team, Gail, Solomon, and Susanna, and Caroline, and Tankita. I want to play a role this year, 2021. I want to dedicate to the basic schools to see how GraceKennedy can play a role in early childhood education. And we are going to be investing significant money behind the basic schools, early childhood education for this year. And then this is always the headlines, mergers and acquisition, locally and internationally. You would have read that we have set up a mergers and acquisition unit in the corporate headquarters, reporting directly to me, headed by Andrew Leorini. And I've learned one thing by setting up this unit: focus, focus, focus will result in success. And I want to share with you one which was announced previously, that GraceKennedy Financial Group, under the leadership of Grace Burnett and Stephen Whittingham, we have acquired 100% of Scotia Insurance Eastern Caribbean Limited. And of course, in bold there, the transaction is subject to regulatory approval. And you'd see from the slide, the islands, 7 islands that we'll be operating in, and the products that we'll be offering: personal loans, credit protection for personal loans, residential mortgages, personal lines of credit, personal and small business credit cards. I'm very, very, very optimistic. We spent a lot of time, spent a lot of money doing our due diligence on this company here. And I think this is a great acquisition for the GraceKennedy Group, and it's going to result in us reaching that 50% of our profits outside of Jamaica, as I earlier shared with you, as part of our bigger vision. I'm also happy to announce, and this is the latest update, I wouldn't call it breaking news because we sent this over to the stock exchange earlier, that GraceKennedy, we have bought the 876 brand, Blue Mountain Spring Water brand. We, our wholly owned subsidiary, World Brand Services Limited, we have been distributing the brand since 2017. The brand has been growing at a phenomenal rate, and we believe that is going to be an excellent addition to our brand portfolio. One of the things that I would say is that I'm looking at the opportunities behind this 876 brand, and based on some earlier research, I believe that it has legs to be exported to the USA, to the UK, and to Canada, and to the Eastern Caribbean, and possibly Cayman. The other discussion that we're having is that we probably could have some flavored water in the 876 brand. So I'm excited, very excited about this acquisition, and it kind of solidifies ourselves in the spring water market, because as you know, we own 35% of Catherine's Peak, and we also distribute through Grace Foods and Services, Catherine's Peak. World Brands will continue to distribute 876. I already mentioned about corporate social responsibility, but the visual will be fantastic. And our social responsibility is not only in Jamaica, in the communities that we operate in, outside of Jamaica, we try and play our role. So it's a hashtag, we are stronger together. We care, that is our mantra for 2021, stronger together. So colleagues, I hope you enjoyed my presentation. And as I would say, as we look forward to our 100th anniversary and beyond, the best is yet to come, I can assure you, for GraceKennedy, we remain focused on building and protecting long-term value of our stakeholders. I'd like to use this opportunity to thank Mayberry Investments for giving me this opportunity to share the presentation. And I also want to thank sincerely our board of directors, our great employees, our customers, our loyal customers, and shareholders for their unwavering support and loyalty as we realize our mission and vision, guided always by our core principles of honesty, integrity, and trust. Thank you very much, ladies and gentlemen. I think I'm going to be opening up for some questions now. Let me see if I can stop sharing this slide. Stop.
I think we're good, Don. Thank you so much. That was a great presentation. We really,
okay, thank you. Thank you very much.
Really appreciated that. I'd like to welcome our CEO and graduate from the GraceKennedy Prep School, Gary Peart. As well as online, I think we have our chairman, Christopher Berry. Welcome, Chairman Berry.
So Dan, we have two connections here, right?
Yes.
Chris Berry went to the greatest high school in the world.
Hampton College.
So it's called St. George's College.
So did I.
Greatest high school in the world.
So did I.
Nice, Dan.
Yeah.
I'm surrounded.
I'm looking at the color of your shirt.
There you go.
And then guess what? I was secret for you. Gary Peart actually made it to the University of GraceKennedy. Not the prep school. He did well. He's a bright fella. He did well.
Why you Georgians, live in this funny world?
Well,
yes, sir.
Thanks again for the presentation. We too had a very, very small presentation in 2 minutes. We did our own analysis of GraceKennedy. As you know, earlier this year in January, we picked GraceKennedy as the stock to buy, one of the stocks to buy. And as Webby said, as Don said, we've watched that stock go from a low of $53 to a high of $90. So we're very proud to see the market recognizing GraceKennedy, now trading at a PE ratio of 14.37 times in a main market that has an average of 16.9 times. So it still has good legs for growth, folks. Still not too late to get you some of that GraceKennedy with a total market capitalization of $89 billion. Next slide, Don has covered most of the points in terms of the growth and profitability, but it's still nice to show the fact that the business now has earnings per share of $6.25. Revenues topping $100 billion. 4 years ago, Don, you talked about wanting to grow revenues to $100 billion. You're there. I think you got there a year or two early. It's impressive. 15% growth in shareholders' equity, also very impressive, as you can see, folks, on the slide. 34% growth in profitability, and on the next slide as well, too. Segment results. Again, Don hammered this pretty good. Very impressive to see the 96% growth in profitability for the food and distribution segment. Very importantly, they've increased their gross profit margin, their profit margin, from about 2.4% to 4.3%, so almost doubling the profitability margin. So sales are up 11%, but the profitability is up 96%. Again, extremely impressive. Only segment not showing growth and profitability, as you mentioned, Don, was the finance division, and that's understandable again. But otherwise, the business showing itself to be extremely COVID resilient, with growth in money services, no doubt remittances, and also the insurance area. And on the last slide, when you want to see the epitome of growth, just look at the quarterly results and this graph. Last 4 quarters, the profitability just keeps increasing and increasing and increasing. So very impressive, Don. Congratulations again. That's our take on it in a nutshell.
Thank you, Dan. Thank you, Dan. And as I said, we really have a good team here working at GraceKennedy, and I am privileged to be the CEO at this time in the company's history.
Absolutely. So let me jump straight into our first question for you, Don. How has the disruption in the global supply chain impacted raw material availability, inventory management, and delivery costs?
Yeah, so as I mentioned earlier, Dan, we were planning for this through our business continuity plan. So for 2020, we came through quite well. But I'm now looking at 2021, and what I'm seeing is that commodity prices have in fact gone up, and gone up quite significantly. Also, freight rates from Southeast Asia has gone up very significantly. In terms of our disruption and our relationship with our suppliers over the many, many years, we in fact did not have a disruption in supply at all. And we made a decision at GraceKennedy for 2020, because of the pandemic, that we are going to be long in inventory to ensure that we have supply. So that was a philosophy that we went into 2020, that we're going to be long in inventory. 2021, there's so much uncertainty that we have to manage it very carefully, but we are adopting that same principle in terms of long in inventory. However, I'm seeing clearly coming through the potential for increased cost for some of the commodities and the freight rates. One thing that I've said is that manufacturing, we have set ourselves a target we now export 30% of what we manufacture. We want to increase that to 50% in 2 years. And what this is showing in terms of self-sufficiency is that manufacturing is really a competitive advantage. And that came out very, very clear to me. So, so we're going to be doubling down in terms of investing in manufacturing. Obviously, so the raw material costs for some of the inputs will go up. But on a whole, I believe that that we are very competitive in terms of manufacturing. So one of the goals, colleagues, to keep your eyes on is that we want to export half of what we produce through the GraceKennedy factories, and I think that will also help us with the whole issue of overhead absorption and lower costs of our products that we produce.
Thanks, Don. Appreciate that. Gary, any questions from you?
So, thank you, Dan. Welcome, Don. I have 2 questions.
Welcome, Mr. Perry.
I have 2 questions.
Sure, go ahead.
So one of the things I'm beginning to see, Don, is there are food companies that performed very well in COVID. And a question I'd asked several companies a couple months ago, once we normalize from COVID, should we expect a pullback in revenues and profits for these food companies? That's one. And the second question,
Yeah.
you know, I think it was in your report, but you didn't touch on it a lot in this presentation. What was beautiful about these results is that there weren't a lot of one-time transactions.
Yes, yes.
So there's core, sweet profits and revenue. But one of the potential Achilles heel of Grace has been your pension fund. It's a defined benefit pension fund. And with the lower interest rates, we're seeing massive gains through your through your comprehensive income line. So the question is there at some point a contemplation to convert that to a defined contribution to minimize the potential impact on future profitability?
Okay, thanks, Gary. Those are great questions. So let me answer the last one first. We have already done so, Gary. So from 2010, all new employees are now on a defined contribution scheme.
Right.
So the defined benefit scheme, if you're employed to GraceKennedy before 2010, then you remain on that. And obviously, by attrition, that will normalize in terms of going forward. So we have already dealt with that in terms of a new scheme, a defined contribution scheme from 2010. In terms of, and thank you for making that point. I should have made it actually, that for 2020, this is pure profits of operations. There's no one-off gain at all. And I'd like to repeat that. There's no one-off gain at all in our numbers that you are seeing here. In terms of COVID-19, that is such an interesting question. And we have spent many, many hours trying to analyze it and with my CFO and my team in terms of if we try and normalize COVID-19. Let me say, COVID-19, there is a lot of ups and downs. So what was the downs for us in terms of the food business in particular? We have a very viable, profitable food service business. And what I mean by food service business, we supply to a lot of restaurants and hotels. And by the way, this is not only in Jamaica. Our food service business in the UK, it's called Funny Bones actually, it's quite a large business. We also supply in the USA and Canada restaurants and hotels to a lesser extent. So those revenues were actually down as high as 70% because the hotels were closed, restaurants were closed, so we got a hit there. But what did we do? As I said earlier, we invested in our brands and that paid dividends for us. So on a whole, net, our revenues for the food division is up, we saw that by 11.5%. But more importantly, with an increase in 11.5% for our food business and revenue, the profits went up by 96%. Now, I said, why? So let me give you an example of why. We invested $6 million in a brand new first world logistics center in New Jersey. What did that result in? That resulted in our distribution cost per case being significantly reduced. And that is why you are seeing an improvement in our margin. So when we speak about margin management, it has to do with investment, not only in the supply chain, but in the infrastructure and the distribution network that you are using to distribute your food product. Gary, I feel very confident. Despite the uncertainty, there's a lot of uncertainty. We spoke about food inflation, that the performance of our food business, maybe it's not going to be 96%, to sustain that kind of a growth rate is going to be challenging. But I feel very strongly that it will continue to grow in double digits going forward. And of course, that is going to be augmented by acquisitions. I just announced 876 acquisition, which is going to, help us to meet our objectives. One thing that I'd say also, you can do it's no high science in terms of strategy, but I'll share with you that the market and I keep saying the USA because it's so big. You have non-Caribbean people consuming the Grace products. And we saw that in our IRI data, because we use a lot of, when you're in overseas market, you have to use data to drive your strategy and your marketing initiatives. We saw a lot of non-Caribbean people. So what did we do? We started to promote Caribbean recipe. And you'd be surprised to know the feedback that we're getting on our social media network and on our website of people saying how much they enjoy the oxtail. Yes. So we found in terms of our research that non-Caribbean people love oxtail. So what did we do? We have a Grace oxtail sauce, which is being sold in the USA. And
Nice.
to put it in my parlance, Gary, the oxtail sell off. Oxtail sell off. And the recipe is right there. So they can go on the website, look on the oxtail recipe, and use our sauce.
Right.
So there are a number of innovations that you can use. But I really believe that it's sustainable. Despite the headwinds, I think we have the right strategies in place. We have the right people in place. Andrea Coy and Frank and Derek Ricard and Nimal, everybody. We're very focused in terms of delivering on these results.
Thank you for that, Don. And you certainly have the cash to make it happen. $24 billion of cash, people, despite the $89 billion of market capitalization. Again, very impressive. Let's go to Chairman Berry. Chris, do you have a question for your St. Georgian buddy?
Oh, God.
Well done. Welcome back.
Hi, Chris.
So, one of the things our friend Gary Peart doesn't know
Oh, Jesus.
is that when we were going to George's back in the day, and you could no longer, Father would no longer allow you to enter the gates.
Oh, Jesus.
You were expelled. Where did they all go, Don? Tell them where they all went.
To the
Back
great
in-
Camden College.
Yeah, Father would call up Captain and say, "A little fella down here,
You're ramp rough, Mr. Berry.
But we can't allow him to turn worthless. So this is just to shake him up. And you guys has opened up a space up there. And, that's what used to happen back in the day. Anyway, my question is this, Don. What I find very exciting about the whole thing is that, the US market is so big, and the fastest growing group in the US is the Hispanic group.
Yes.
And Hispanics share a lot of food preference with Caribbean people. So tell us about how you're doing in that segment and how you plan to really to spread the Caribbean food into the Hispanic segment, because I think it's a huge opportunity for GraceKennedy.
Yeah, big question, great question. So remember when we bought the company in 2013, we actually bought a Hispanic brand, Lafayette. And the Lafayette brand is actually doing quite well. But when you talk about the Hispanic market, there are different segments of the Hispanic market. And Chris, what we're seeing is that GraceKennedy, we need to look and see how we can enter the Mexican market. When you can enter the Mexican market, if you can get just even a little piece of it, it's going to be huge. So actually I have a consultant in the USA looking at the possibility and advising us, a very experienced person in the food business, of how, if and when GraceKennedy should enter the Mexican market. So it could be by acquisition, it could be by acquiring a brand portfolio also. Remember when we bought the company, again, this is having a focused, clear vision. One of the things that we said, and Goya is a $1 billion company. Our revenue in the United States is 150 million US. There are a number of fragmented brands, El Salvador, Iberia, etc. And we said that, listen, when we put the Lafayette brand and the Grace brand together, we want to be the number 2 brand in the United States of America. So that is where our goal is. How do we build the Lafayette brand? How do we build the Caribbean brand? And what you have noticed, Chris, there's actually a fusion of Hispanic culture and Caribbean culture as it relates to food cuisine. And that is a win-win. So when we use our Grace brand, when we use our Lafayette brand to go into a typical Hispanic store, and our salesperson is there with the Grace brand, what you find is that that store is also taking the Grace brand, like the same oxtail sauce or the tropical rhythms or the Grace mackerel too. So it is working very well hand in hand. Our focus now, Chris, is to see if, when, and how that Mexican market, because that's when the game is going to change. I want to make a point since we are now Mayberry Investors Forum, and this is something that I'm beginning to feel stronger about. GraceKennedy Foods, if you think about it, we're actually an international company headquartered in Jamaica. If you think about it, there's no other Caribbean company that has the reach. In the UK, we are the largest ethnic distributor of food. Canada, we are huge there. And the USA, where they can see what is happening there. I believe, colleagues and audience on the call, that there must be an opportunity somewhere down the road. I haven't pinned the timeline yet, but I'm doing some work on it, that GraceKennedy foods can be listed on a overseas stock exchange, whether it's the New York Stock Exchange or NASDAQ. I've been saying it for a long time, but I really see it coming together now, based on what is happening in the company. Chris, I hope I've answered your question adequately.
I see him giving you the thumbs up, so that's obviously a
It's a
yes.
Georgian thing again.
It's a Georgian thing.
These
Oh, no,
old
no,
Georgians.
no, let me tell you something. As I said it earlier, when we released our results, and this is like first quarter results or second quarter results, the first WhatsApp I got was from Mr. Christopher Berry. And then he called me after and said, "Dan, you have broken the code." And I thought about what breaking the code really means, and so I want to share with you this afternoon. I hope you have agreed with me in terms of how to break the code, because I really feel good about that call from Chris.
Absolutely. Well, I looked at the top 20 shareholders. I didn't see us there yet, but I won't be surprised if we end up there. Gary, any more questions?
All I'm going to say is that Mr. Berry is a happy man. Don't worry about that.
I'm sure he is. I'm sure he is. Tell me, Don, has there been any consideration for expanding your high-low brand regionally?
You know, I've been thinking about it. We operate 11 stores in Jamaica. It's a tough business. It's a very hands-on business. I need to get it totally right in Jamaica before I expand outside. We have discussed it, but right now, you know, Dan, strategy is about choices and about allocation of capital. And where we are now is that that's not on my or our priority list to expand high-low outside of Jamaica. I need to get it right here first. We're building a new supermarket in the Grill, and we'll be looking for opportunities to expand in Jamaica, especially as I mentioned earlier with the e-commerce site. I think it's going to be really great, and that will ensure that efficiency and reach for high-low, and because it's going to be delivering also. I think that will do well. But to answer your question, not at this time.
Understood.
Yeah.
And Gary?
Yep, thank you, Dan. So my next question to you, Don. I mean, you know, I heard Chairman Berry a while ago speak about the olden days, and you know, all of you olden Georgians used to go to Campion. I'm happy to be on the forefront of the new Campionites who are actually doing much better than you Georgians ever could, you know. But you know, as you said, you know, profit is an opinion, cash is fact. And then when I look on your balance sheet,
again, Mr. Pierce, I just can't remember your days.
You know, so the thing now, Don, is that since you have cracked the code, and you know, that's one of the things we saw when we decided to make the investment in Grace, yeah. And we might laugh about it and speak about cracking the code, but it became very clear that something special was happening at Grace. Right? I mean, you saw the movement in increase, but then you saw the abnormal movement in profits. So it was clear that a code was cracked there. But my question to you, you know, I mean, I know you love your cash. You have $24 billion of cash on your balance sheet. You have been doing some small mergers and acquisitions. Is there an opportunity for Grace to make a major move, you know, given what is happening? Because in the middle of a crisis, there are opportunities that arise which don't arise frequently. And would Grace and yourself think about a major acquisition that would really seriously move the needle going forward?
Yeah, all right. So Gary, thanks for that question. That's a great question. So when you look at the GraceKennedy's cash, I like to separate it in two, because we're a financial services company.
Correct. Right? So the deposits aside.
Yeah, so you have regulated
right.
cash and you have deposits, etc. But to answer your question directly, we have about 10 different acquisitions that we're looking at in the pipeline, and at varying stages. So some is our initial discussion, some is let's sit down and talk further, some is at due diligence stage where you're going through the numbers and you're seeing if it really is a strategic fit.
Right.
And so we're past that in terms of our lawyers are now talking to their lawyers and their investment advisors. But I'll say to you, there are those in that 10, and obviously I have to be very careful what I say, we're a public company, that can be easily described as major.
Gotcha, sir.
Whether it happens or not, we will see, but it can be described as major. And not only in Jamaica, but outside of Jamaica.
Thanks for that, Don.
And I may also add that is both in food and financial services.
Excellent.
Noted.
Thanks for that, Don. Questions are running in from social media. I think we have time to take just 2 or 3. First one in response, I guess it's a
I beg you, remember, I have to respect the protocol of disaster risk management, and I don't live very close to downtown Kingston.
Yes,
So
yes.
I apologize.
We'll definitely wrap up in the next 8 minutes for sure, Don. First question coming in.
Yeah,
from,
man, I'll be good.
Very good. First question coming in from Troyan Browning. He asks, how will these mergers and acquisitions be funded?
Okay, so we normally, as Gary appeared earlier, said that we have our balance sheet, we are strong in cash, so we have a cash pile for acquisitions. For efficiency purposes, it always suits you to mix it with debt and equity. So we have our primary financiers, mainly the commercial banks in Jamaica, and there's one in the USA. So we as a template, I would say, we'll probably use 30% cash, 70% debt, but don't hold me to that. But that's kind of a model that we use when we're doing our justification for the acquisition. So it's a mix of debt and cash.
Makes sense, makes sense. Second one comes in from Ryan Reed, who asks, are you bullish on the local banking sector?
Am I bullish on the local banking sector? Maybe bullish is a strong word in terms of where we are now, because obviously, and you'd have seen from the various results that the banking, and with our own results, that there's an impairment charge for most banks that have reduced their profitability for 2020. But what I'll say is that this too shall pass, and I believe that the banking sector is going to come out much stronger when growth returns. So yes, I'm pretty bullish on the banking sector. Yes, I am.
Excellent. And last one we'll take from Felice Campbell. She's asking about the growth in North America and how much is coming from organic growth versus acquisitions such as like Leffe Foods.
Right.
Okay, no, so Lafayette Foods is, we classify that as organic.
Yeah.
We have a measurement system here at GraceKennedy that we're defined as new product and innovation. If a product has been with the GraceKennedy group for 4 years, we don't call it a new product or an acquisition product. So Lafayette was acquired in 2013, so it's our product. So all the growth that you are seeing in the U.S. market, the significant growth in the U.S. market, it is all organic growth, no acquisitions in there. However, what you are seeing is that we have introduced new products. So when I say to you that our patty business is growing at over 100%, that has contributed significantly to the profitability and the growth of the USA LLC. And again, I think what strategically was a good move for us is that we actually bought 49% of the patty plant in Florida. So in terms of the sustainability of that growth, we have some amount of control and influence to ensure that our patties grow, and we're expanding that market now. So to answer your question, Felice, there's no acquisition growth in the numbers that we have mentioned, but we have significant investment in our brands. As I said earlier, we have significant investment in our infrastructure, and that is why you're seeing the growth in revenue and profits.
Thanks, Don. Appreciate that. I think that'll bring to an end our Q&A from social media. Now I'd like to congratulate our winners from Instagram from the giveaway, courtesy of GraceKennedy, and they are Exquisite Sense, Aisha Chanel, and For All Sneaks. Congratulations, guys. Thanks for participating in that program. Now I'd like to move on to our Top Stock Picks segment for the program, which is just a review of 2 or 3 companies that we've previously recommended and now looking back at earnings results. good deal. First up, we have Lasco Manufacturing. Can I see that on the screen? Great. Moving through quickly in respect of time. Again, you can see here that this stock has had a low of $2.77 and a high of $4.86. It's currently trading at $4.30, which is a PE of 14.55 times in a junior market that has an average of about 23 times. Trading earnings, $1.2 billion. That's pretty impressive. Last SEM. Next slide. Again, we can see the profit for their 9 months ended was $1.3 billion. That's up 37%. Again, really impressive, 16% growth in shareholders' equity, and this is why we continue to like Last M. Next up shows quarterly growth in profits, and in the last quarter, $281 million profit. Next one, Jamaica Broilers Group. This is a great company doing great things. Again, you can see stock price moving from a low of $22 to now a high of approximately $30. P average of 17.8 times, where the industry average is 19.7 times. Trailing earnings, $2 billion. If we look at their 9-month results to January, we'll see that their net profit was $1.86 billion. Again, very impressive. That's 64% growth. So although only 2% growth in sales, they've tightened up on the costs, distribution costs in particular, and driven that straight through to the bottom line. 64% growth in their net profit, 51% improvement in the earnings per share. Really impressive growth. And on the next slide, I believe we look at the segment results. So we see, again, they're showing very good growth. Generally speaking, in the U.S., 12% growth in sales. In Jamaica, we see where there were some challenges, 5% reduction in sales, but overall, business has grown sales and certainly driven the profitability. So Jamaica Broilers Group, congratulations. I'm sure we're going to have Chris Levy on the program later in the year to tell us a little bit more about what's happening at Jamaica Broilers Group. Top losers and top gainers for the week are... First, we start off with CAC, SOS, Iron Rock down 9%, Margarita Turks Limited down 8.55%, and now for the gainers, up 12% is iCreate, followed by MDS up by 11%, followed by Palace Amusement up by 8.87%, eFresh up 8.79%, and last but not least, SSL Venture Capitals up by 8.47%. Moving right along in the interest of time, we'd like to look at our foreign exchange segment. And as you can see, we've been watching this one carefully. We've seen a little bit of revaluation in exchange rate from the last week where it was up to a high of 150, still showing 4.16% devaluation year to date, something we want to watch. If you were to annualize that, you'd get 22% rate of devaluation, something we definitely hope won't happen. But we're certainly watching the dollar, the exchange rate carefully. Gary, any thoughts about exchange rate?
Well, I mean, you know, Chairman Berry got this one right. You know, when it was up at 152, he was saying, you know, don't chase it.
Don't chase the dollar.
You know, so we have to deal with him being right once again.
Yep. So apparently Mr. Berry moved stock prices and exchange rates. You know, pretty impressive. Chairman Berry, any last comments from you?
Yes, the market came off nicely. I think, you know, I'm hoping we're going to have a really great summer and a strong winter this year if we can get the vaccines out and COVID under control. So hopefully we'll have a good year as far as Forex is concerned.
I hope so too, and we're all looking forward to bringing this pandemic under control. We certainly look forward to the tourism sector picking back up as our guests from North America certainly will be significantly vaccinated by the summer and hopefully suffering from cabin fever and willing to come back out to Jamaica, Gary. Well, folks, it's been a great program. I really want to thank our viewers for being a part of this weekly investment forum. I'd also like to thank our special guest, Senator Don Webby, for his participation in today's investor briefing. We're certainly looking forward to having yet another insightful discussion in the upcoming week where we'll be featuring Kerry Robinson, the Executive Chairman of Mail Pack Services, another company that's been doing well. Be sure to follow us on social media to stay up to date with our live streams. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you all to our viewers for tuning in today, and remember to keep safe. And as always, remember,
Slow and steady wins the race.
thank you, everyone. Goodbye. Thanks, Don. Thanks, Chairman.
Bye bye, guys. Take
Bye,
care.
guys.
Our family and friends are a big part of who we are. They are our biggest supporters and confidants, and our source of bellyfuls of laughter.
And when it comes to keeping you connected, Western Union is here to make it safer and easier with their digital services. Now your family and friends overseas can send you money without leaving home by using the Western Union app or westernunion.com. Just visit gkmsonline.com to register and share your banking details with your sender to start receiving funds directly to your bank account, so you don't have to leave home to collect. GraceKennedy Money Services, home of Bill Express, FX Trader, and Western Union, doing our part to help you stay safe and connected to the ones you love.
Grown in the foothills of Jamaica, shared with the world, made with real love and passion, the gift of flavor that you love. We made real good jerk so you can make something great. Turn up the flavor with Grace Jerk Seasoning. Enjoy real Jamaican jerk.